Welcome back. Today I'm unveiling a never before seen options trade we call the elephant. It's a hedged, rules based setup that could change how you think about selling premium. After months of research and backtesting, my team and I are sharing this proprietary strategy for free. Stay tuned for a behind the scenes walkthrough.
Okay, in this video, I'm going to go over backtesting the Elephant 1.5, version 1.5, and I'm going to just start from scratch. This is what the Elephant looks like right here, you can see. I'm going to go ahead and start from scratch, create a brand new account. I'm going to call it, I have to put 2024 in front of it because I have so many accounts. Elephant, it's version 1.5. Backtests.
Quick note, if you want a proven hedged premium selling strategy while you study the elephant, my Safe Wheel course is free for a limited time. It's rules based, it takes 10 to 15 minutes a week, and it is linked below.
I believe I pay approximately what I did when I was with TD Ameritrade, $1.09 per contract. I'm going to be trading SPX. Okay, so I just created the account. Let's go to it. And we'll go, and I'm going to start in 2018. So let's go to the account 2024, Elephant 1.5. Nice, clean, brand new account. Let's go to 2018, January 1st. I like to trade at 8:30. Okay, I probably have a model in here, so let's just clear everything. All right. So I'm going to start here. We're going to build the first elephant trade now. I want to go to approximately 150 DTE, and I want to find the use a quarterly or a weekly, somewhere where I can get 14 days in separation between expirations. So I'm going to use two expirations. One of them is going to be the near, one will be the far. They'll be separated by approximately 14 days. Right here, 164 to 149, there's 15 days in separation. Anywhere 13, 14, 15 days is good. 16, maybe 12, maybe. They're kind of pushing it a little bit. Okay, so it's very important to be, where you want to be. All right, and we go to the 25 delta, closest to 25 delta. This is about $1 away, and I'm going to do plus 12. And then down here, I'll go minus 24. And what I'm looking for here is, see this line right here? I'm looking at the price. It is approximately 33,000. So I want this to be to 66,000, the peak, it's 92. So that's not symmetrical. I want it to be symmetrical. So I'm gonna move it down a little bit. I can already tell by looking at it, that's not symmetrical. So let's go up and see which one is the most symmetrical. Okay, this one's not symmetrical at all. So this one is the most symmetrical. It's not perfectly symmetrical, right? Because it's what, 32, so I want 64, and it's like 88. But this is as close as I can get. So I'm going to take that. And then now I'm going to do on this expiration cycle, I'll start with 4, and I'll look at this hump right here. I want this hump to be even with this hump. This is a very small little hump, but I want them to be even. So I'm going to move this 4 down because the hump gets smaller as I move it down. So it's as even as I can get it. Okay, well there it's a little lower, and right there it's a little bit higher. So it's kind of even, so I'm going to take the lower. All right, now I'm going to go with another 4. Actually, let me go a little bit higher this time because I don't want to get involved with this strike here. Okay, so a little bit higher. It's not totally, it doesn't have to be perfect. Okay, you look at that second hump. I'm trying to get that one even too. This is the, so now I have 3 humps, trying to make them as even as I possibly can. One thing I'm going to do here is after I kind of define where that hump goes, I'm going to split it into 2 and 2, and then it makes a little bit of a difference. See, that hump's too high, that hump is too low, so I have to choose between the two, right? Over here, I'm choosing between this hump and higher and lower. I'm going to choose the lower hump. Right now I have 4 on the downside, another 4, the final 4 of the contract. And what I'm trying to do here, okay, is you see this upper expiration line? I want this as high as I can get it, but I also don't want to overpay here for the downside. So the more I move this up, the more I overpay. This is fine, this expiration line, to be below break even. So let's see what happens when I put it down here. Okay, so that's pretty good. Let's see if I go down a little more. Okay, that's also fine. My goal here is to, right here, probably get this somewhere between maybe 10 and 25%, right? It's not going to be perfect every time. My upper expiration line, I'm trying to get that as high as I can. Right now it's 1400. Okay. There's different environments. So there's going to be different times where you can get this super high and this protects even better. It just depends on the environment you're in. This is probably the best way I can build it. I'm protected here to the downside and I have some upside potential here. My profit target is going to be about half of my upper expiration line, so it's around 14. So I'm going to try to shoot for about $700 in profit here. And this is going to be my structure. I'm just going to call it E for elephant. So I'm going to manage this now. There's not much management. Basically, what I'm looking for is a $700 profit or $1,500 loss. I'll take it off. Or it goes outside the back end here into the sea of death. Then I'll take it off. And really, that is kind of it in terms of what we're going to do. Now, when we hit 30 days left in the trade, it gets a little weak to the downside. So I might adjust my deltas at that point. So we'll see what happens once I get there. So I'm just going to hit play. I'm looking for 700 minus 1500 plus 700 on the P&L and coming out the back end. And then of course, let me stop here. And then of course I'm watching. I'm going to stop here. Of course, I'm going to watch this near to see if it gets to 30 DTE. And then I need to do something. Probably. We'll see if I need to do anything. Up $268. Let's go forward. This is almost a set it and forget it kind of thing. So I'm either looking for $700 profit or minus 1500. Just take it off, take the loss, put another one on. Okay, and you can just see it morphing as we go. Does have some negative vega, right? So if the volatility expands, it could come down. But it's a no-touch situation. Okay. Let me go back. This is interesting, right? So you can see if I come out the back end, I might take a loss. If I get into the sea of death, it might be for a loss. That's fine. Either take the loss or, put on a new trade. You can see that there's other times in there where it actually was ahead a little bit. Okay, let me go back. Back. All right, so I'm going to take a loss here. Minus 1900, that's just where it is at 830. So I'm going to take it off and put another one on. So let's do that. We did this on February 8th, so we're going to go February 8th. And we're going to do it again. Go to closest to 150 DTE. And 127, 137. So this is 14 days apart, right? That's what I'm looking for. 14 days apart. So we'll go, this is going to be the far. If this was 14 days apart, this one would be the near. 25 delta. 12, and then looking to get symmetrical with my minus 24. You can just eyeball it there. This could be, let's see, this is about 60, so I want this to be about 120. It's 108, so it's close. It's pretty symmetrical. Let's see if this one's even more symmetrical. Here, 56, so what am I looking for? 112, and it's 115. So that's as close as I'm going to get. If I move it, it's going to get worse. Less symmetrical. Okay, now I'm looking at my hump with 4. That might be good. Yeah, that's pretty even right there. Let's look at the second hump with the 4. That's too much. I need to go down. Still too high of a hump. Okay, that one's probably as close as I'm going to get. Now let's see what we can get with trying to keep this upper expiration line, as high as we can, but also getting some really good downside protection here. See, this is really good. It doesn't even cross over until like 35%. So that's pretty good protection. Even though this structure right here kind of fell in, it doesn't really matter. I'm looking at the T+0 line, and we're up about, you know, $1,300. Let's just kind of move this around a little bit, see where we can. Let me do something else. I didn't split those strikes. So let me do that too. That'll have an effect. So what I'm going to have to do is go 2 and then 14. That's like splitting it. Okay, so here's my structure. 18%, that looks pretty good. Got a good upside. You can see we have some negative theta here, so it might draw down before we hit profit, which is fine. And we're right here. Let's see if I move this forward a little different. Let's just see what else I can get. Okay, that's too much, or not enough downside protection, and that's a little too much, so we're going to put it right there in the middle where we got good downside here, good hump, and then we've got some good upside. So looks like profit target again is going to be about $700 here, about half of what the upside potential is. And we'll go ahead and commit this, call it the E, and we'll play it down 700, down 600. Okay. And we're just hanging out here looking for $700 profit, or down 1,500. We went through a crash too, I think. Yeah, February 5th, 2018. Didn't even notice it, really. Well, I did kind of. It got close over here to the Sea of Death. It's down 700, down 252, 442. So there's a lot of nothing going on, just kind of hanging out, looking for $700 profit, or being down $1,500. Waiting for the trade to mature out a little bit. I'm going to stop it here and see how many days in trade I'm in this thing. Okay, let's see. Okay, this 78, so I'm waiting for this to hit 30. I might have to make an adjustment. It was an interesting, 2018 was pretty interesting market, up 300. We're in April. $468, $588. 768. Okay, stop it right there. I would have taken profits. Okay, so let's go back. So on May 1st, I've gotten out here. I'm going to take that. And we'll put on another trade. So we'll go to closest to 150 days. And see where we can get 14 days. This is 7 days apart right here. This is like 23 days apart. Let's see if we can go back a little bit. 122, that's 20 days apart. This might be what I have to do. Let's see, 22 minus 8. 18. Yeah, that's 14 days. Let's see if there's anything further out here that I can get 14 days. Yeah, no, I'm not going into the 200-day range. So I'm going to have to come all the way back to the 122 and 108. So this is getting a little close, but it's fine. So this plus 14 is 122. So this is going to be the FAR. We're going to go to 25 delta. 12. And minus 24. Let's see how symmetrical we can get. This is 40, so we're going for 80. 75, that's pretty close. We might not be able to get better than that. Let's see. This is 37, so 72, 82. No, that's not as close. And see if this one is. No, okay. So this is as close as I can get symmetrically. I'll go there. I've got a lot of granularity here, so I should be able to build this trade out nice. Let's go with 4. Look at that hump. Not hump high enough. Still needs to be higher. Getting close. That's pretty even right there. I'm going to split this out. Okay, I can't split it because it's not available to split right here. So that's fine. I just won't split it. Okay, that's too much. Looking for the second hump to be even. Pretty even there. I'll take that. And we go with our final 4. And we're looking to... See, one thing I don't like is I can't split that. So I might go ahead and move this up just a little bit so I can split it. All right, that looks better. All right, sometimes you can make those minor adjustments. See how this is kind of a too much downside protection, right? So I'm going to move this down. That doesn't look too bad. I've got some pretty good upside. Let's see here. I'm crossing over way over here at 30%. Let's see if I give it a little more upside and probably be just fine. Here's a crossover here around 20, over beyond 20%. I've got a lot, $1,600, $1,700 upside. Very nice. So I'll go for an $800 profit target with this structure right here. And we'll just go. It's a no touch, pretty much. Okay, I'm looking for plus 800 or minus 1,500. And I'm just moving day by day. You can see here because I just hit the play button. And I'm looking at the P&L. Looking for $800. You can see the structure morphs nice to protect you. Most of the time. Sometimes it doesn't. Okay, just going through. We're May. Very easy maintenance. Not a lot of things to do, which is nice. Got 350, got 450. Looking for 800. Just come in every day, take a look at it once a day, and go do something else. Steps 178. 238. I'm going to stop it. Okay. So what happened here is some volatility came in. That's fine. Let me take a look and see where I am. So day 52. So I got about 30 days to look at it before I possibly have to make an adjustment. Down 550. Recovering back up. Down 400. 500. Recovering, so we get closer to day 30, or we might not. We might hit profit before we get there. There's 650, 300, on day 36, 32, 748. Okay, so I hit day 30 with a profit of 748. I'm just going to take it off. I'm not going to adjust it. But I wouldn't need to adjust it anyways, because I'm looking, when I look to adjust, to see how this type of zero line is crossing into the sea of death. I want to make sure that it's up here. So I could possibly, if I were to adjust, I might move this up to get that up higher on day 30. But I'm not going to adjust this. I'm just going to take it off. If I was down, I would make the adjustment. But because I'm not down, I'm not going to adjust. I'm just going to take it off for a profit. And put another one on. So we're in July. Let's go to 150. Okay, 135, 145, 155. That's 20. That's 10 points away. 166, 176. That's 20 points away. Okay, let's see if we have to go closer. Okay, 93 and 105. I'll probably have to do here. So 103. Let's do, that's 12 away. You know, we're getting closer to expiration here, but we're going to use a 12. By the way, like we're in 2024, and in 2024, I don't see this issue. There's a lot more expiration cycles available. Okay. So this is closest to 25, 12, minus 24. That looks pretty symmetrical. 30,000 and 65,000. It's probably the best I'm going to do. Let's look at this. 27, looking for 52. No, way too high. Or it could be this one. No, you can tell by looking at it. So this is the closest I'm going to get. Let's go ahead and do 4. Need to make that hump a little higher. A little higher. A little higher. Go a little higher so I can split this out 2 and 2. Now let's go like 4. It doesn't matter if you split this before or after. I'll just split it before. Look at that, even humps there. Now my final 4, look at that, that's way too much. But look at how much, you see we're in a little bit of a different environment. Look at how much downside I have, and then I still have a lot of upside. Okay, so this particular trade will probably be a lot nicer than kind of the last two. See, I still have way more potential for the downside. All right, so here, this thing doesn't cross over till 20%. This is very nice. See how this expiration line is probably, you know, below the break even. That's typically, I'll try to put it just below the break even. That's typical. And then I got a nice upside up here of 2,000. So I have a $1,000 profit target with this. This is a very nice structure here. And we'll start July 18th and hit play. I'll talk about margin and also how much capital I'm deploying in another video. Okay, up to 50, looking for $1,000 or down 1,500. We might come into the grind down with this trade. If you recall, the market had grinded down in the last quarter of 2018. We're in August, looking for $1,000, 250. Okay. Just letting time go by, letting the trade mature out. Not a lot of things to do. The trade structure takes care of itself as it matures. We're in August, late August of 2018. Up 250, 500, 600, 450, 508. So probably won't hit profit before we start going into that downturn. September 12th, middle of September. 918. Possible to hit 1,000. We'll see. 998. That's probably where I'd take it off. Right there. That's 1,038. Okay. So I'll just take it off here. 998. Even though it did hit 1,000 here, you can see. All right. Let's put another one on. Go close to 150. 150, 150. Okay, I'm at 164, 136, 64.74. That's a 15-day differential, which I like. And let's see where we are here. That's 18 days. 23, 33, 36. This is 13 days. Let's see, is that 13 days? Yeah. That's not bad. And the 64 to 74. So I got a 13 day and a 15 day. I'll just take the 15 day over the 13-day. Plus, I'd rather be closer to 150 DTE here with my near compared to the other ones further away. Okay. So this is $1.20. This is 96 away. So 12, and it's typically right here. Trying to get that symmetry there. 41, so 82. That's 99. Let's see what this is. What? No way. I can just see it, eyeball it. This one's possible. I don't think so. 33, looking for 66. Way too far. Okay. So as close as I can get to being symmetrical is this one here. All right, let's put my 4. Look at the humps. That's pretty close. There's a good hump there. Let's see where the second hump, or third hump, I should say. That's a little high, so I'll take the lower one if I have to choose. That's what I just did. Now let's split that thing. I could have split it before I did the other one. In fact, I'll do that now. Let's see if this is even better after splitting it. Yeah, see, it's still going to be the same one pretty much. Let's put this one on. All right. See, here it's a little too much downside. See how this expiration line is above the break even? I don't need to pay that much. Let's go down. Now it's below the break even. It's kind of weak. We're right on the edge here. See how this is 16%? I guess that's not too bad. And this one comes across. See, this is up here. Yeah, so I'll do the other one. Even though it's just barely, I don't like the downside as much on this trade, but it is what it is. That's what I can build. Here's 2,000 here, so I'm going to have a $1,000 profit target. Let's go ahead and hit this trade, the elephant, and let's hit play, and either down 1,500 or up 1,000, or we come out that back end there into the sea of death, or we hit 30 days in trade. I know we're going to grind down too, but that doesn't matter. I'm not going to change anything because I know what's going to happen. I'm just going to put on the trade that I would put on. Okay, we're in October. It's going to, market's going to start moving down a little bit now, but it doesn't really have a bad effect so far. Down 400. It's holding in pretty strong. Down 342. Down 300 bucks. I still got some pretty good. It's doing pretty good. 182. We're in October, so that initial move down didn't really hurt this trade too bad, and not enough to take it off for a $1,500 loss. $600. Is it going to come out that back end there? Into that sea of death. It's getting close. Nope. 240, 212. Okay, we're in November now. Down 600, 700, 1200. Could take a loss. Nope, didn't do it. 772. Looking for $1,000. Oh, now we're kind of coming up. November, middle of November, down 1,000. 1172. 1200. 1400. Almost. 13. 12. Might be coming out that back end there. 13. I might take a loss in this trade. Down 942. 902. I'm going to stop it here. I'm going to check and see where, if I'm close to 30 days. Okay, I got 60 more days to go, so I got plenty of time. Okay, 700, 860, 700, 700. So I'm basically looking at the trade every single day at about 8:30. Okay. So let me go back. So we basically hit So this is kind of a discretion, you know, are we out or are we not out? I could take this off here, or I can wait, and I'm going to take it off here for a bigger loss, which is at the bottom of the thing. I think it's more realistic to take $1,100 loss considering all of these. So that's what I'm going to do. Considering that this is like the low of the day, that there's other, it's been down $1,100 many times. So I'm going to call this getting into the sea of death. Just barely in there. And we're going to put on another trade. We're in December 6th. And let's find 145, 155, 65, 113, 176, 197. This could be it. Let's see if there's something closer. 113 and 99. I'll take the 113 and 99 over the 200. I'd rather be around 100 than around 200. So I'm going to go here. Minus 25 delta. 12. I can get pretty granular with this. I've got a lot of strikes to choose from. Let's see how symmetrical this is. 51, so 102. It's 99. That's really close. 24 here. 49, so around 100 or 98. 102, that's super close too. Either one would probably be just fine. Let's see here. This is 46, so looking at 96, 106. Okay, either one would be close enough. I'll go here. Now let's work with the fours. Got to go up. That hump's not big enough. Just got to go up again. No. Okay, there's my hump there. I'll go with 2 and 2. Just do it now. Let's look for the other hump. That's too much. That's pretty good. Can't really see it. That's pretty even there. So now we're going to do with the final 4. That's too much. Way too much still. Okay, probably not enough. I'm looking to get that lower expiration line kind of at just under the break even. It's probably going to give me my best. But wow, I got a lot of juice here. Got a lot of power back here. And then I only have this. So I'm going to take away some of that. That's a lot. And give my upside some more. Whoops, I'm going the wrong way. My bad. All right. So even there. All right. This is pretty good. Look, I'm coming across here at the 25%. That's a lot of power. And here I'm at 1481. So I can go for a $700 profit target with this structure. And I like that. I don't really like to put this above that break even. Like it's paying way too much. And I split my strikes already. So we're good. All right, looking for $700 or minus 1500 or coming out into the sea of death. It's 578, 768. Okay, hit profit there. On December, what, 18th? All right, let's get out, put another one on. Let's go to around 150 DTE and then start looking, see what we have. So these are 30 away, that's 30 away. Okay, 174, 184, that's 20 away. See, the 185 to the 192, that's 7 away. Okay, there's nothing going on here. Let's just come back. 87, that's 13, 14 right here. So even though this is around 100, I'm going to take it. It's 14 days away. Let's go to 25 delta, as close as I can. Plus 12, and I can get granular here and get pretty symmetrical. Let's see where we are. 48, so looking for 98 here. 82, no. Let's see what this one looks like. 47 and 87. So 47 plus 47 is 92. And then this one is 88. So that's really close. Let's try and see if I can get it even better. This one 45, so looking for about 90, 91. 91. Okay, so this is even close as you can get. All right, so we've got that. Let's go with the hump. Okay, that's pretty even. Let's split that out. And that's too big. Not enough. Right there. And let's go with the bottom one. Too much. All right, let's take a look at this. Coming across at 20%. Looks pretty good. Got some good ups. Only a $600 profit target. You know, these profit targets are kind of low in this environment here in 2018, but they are what they are. Okay, so I'm going to go for 600 bucks and hit play. Looking for $600 or down 1500 or coming out back in there. That's not a realistic. Okay, there you go. Yeah, let's go here on the 24th. I would have taken this off. Let's see if I would have taken it off before that. No, so it's possible, but see how there's just a couple of these little 5-minute things there, and more realistically it was down in here. So I'm going to go to the next day. This is the bottom of the market, by the way. Yeah, I would have made, you know, 900 bucks on this. So I would have taken it off here. Okay, take it off here. We're at the bottom of this grind down. And let's see what we are, around 150. So 168, no. 179 and 86, that's only 7. No. I would have to come here to the near, looking for 14-day gap. 115, 127, that's a 12-day gap, so it's pretty good. 12, 13, 14, 15, 16 are acceptable. I prefer 14, but I'd rather not go deeper towards the money. Here's 20. Okay, so we got 12 here. And usually it's this one that's the most symmetrical. Let's take a look. 52, so 104, 111. I'm probably not going to be able to beat that because I don't have a lot of strikes to choose from. You can tell that's not going to make it. 42, so looking at 88, way too much. And this one's just probably going to, you're going to be able to see that it doesn't work. Okay, so this is as symmetrical as I can get. Let's get that hump up there. Right there. Now I can't split this. I could go here and split it though. And I'm going to do that. So I'm going to make this a 14. And I'm going to go for, looking at that third hump. That's pretty even there. Let's see what that one looks like. Too much. All right, now let's go with the final one. Let's see, I'm kind of looking at my expiration line. See how it's below? Okay. See how it's below there? So I'm not overpaying, but look at this. Something's, you know, something's telling me that this thing is not a good time to put it on. Because it's not giving me, look at that, 25. That's fine on the downside, but look at the upside. So that means I need to give it more upside by going like this. And by the time I get enough upside, I have nothing. See, the market is telling me don't put this on right now because it's not giving me any upside to deal with. And then when I try to give it upside, there's no downside protection. I'm going to go ahead and, whoops. Okay, I just want to clear all model trades. Let's go to, let's try one more day out and see what it looks like. Got the 113 and the 125. Let's try this. Closest to 25. Let's see how symmetrical this is. A little bit. 58 and 101. It's not too bad. This might be better. Let's see. 46, so what? 92? It's 117. Okay, so I'm going to have to go here. This is as symmetrical as I can get. It's not perfect. I have to build here. I'm trying to get those humps even. That's pretty even, and I can also split it. Let's see what we have here. A little less. A little less. Okay, pretty good. And this thing, again, not letting me put this trade on. Look. See how it's... This is as far as I want to go with the downside, and that I have no upside. I mean, I'm losing. So, no, I'm not going to do this. So, it's telling me, don't put on this trade. Let's go to the 31st. See if I can put it on then. See here, 120 to 108. That's a 14-day. Let's see if there's any other. 151. 72 to 79. It's like trying to get away from this expiration cycle here. All right, let's stay in it. 24.77. Let's see what we got. That's 46, so about 92, 93. That's as close as I'm going to get. Let's build the 4. Go a little higher. That's pretty good. Let's go 2 and 2. And the other 4. Too high. Too high. Good. And no. Too much. All right, so I'm crossing it around 19.5%. Do I have anything? I don't have anything, no juice on the upside on this trade. So I'm going to go out another week. Let's go to Friday the 4th. Let's see if we can put it on. I might need to get into a different expiration cycle. See, this cycle right here is just not working. So let's see what else is available now. 147. No, nothing. I'll try one more time with this cycle. It's 12 days. You know, that's probably the problem, is the 12 days. I wonder if there was anything. I'm going to go back to the 24th and see if there was anything that was closer. Look at, so that 12-day thing. This is what, 20 days. This is 80. This is 14 days right here. So I'm actually going to take the 14 days here even closer, because that 12-day thing wasn't working out. You can see that it's important to get that, 13, 14, 15 days. Okay, so I'll go 25 here. Got some good granularity. And I'm just eyeballing it before I kind of get in there and measure. That should be 50, 100,000 would be good. It's 90, so not quite. Let's go here. Good. And 100, looking for 195. Probably can go down a little more. 46, so 92 and 98. 43 and what, 86, 101. Okay, so this one was probably the closest. Started going the other way on me. Let's go with the 4. That's pretty close. Yeah, that's probably even. Let's split it. This upper here. Go with 4. Yeah, pretty good. Let's see what we end up with here. That's too much. Yes, kind of the same problem, right? Can't build this trade. You're coming out here at 20 something percent. Let's see, maybe I can come down a little more and get something. No, that's just not worth trying to get 200 bucks out of it. And now you're coming across there somewhere. This is what, 16%? That's not too bad, but look at how weak that is. It's just not very strong. And then I have almost nothing to do with just the way the market was here in December. So I already tried the 4th. Let's go to the 11th and go to 150 days. So we've got 140 and 161. No. 168, 152. No. 109 and 140. 97 and 109. This is probably that same expiration cycle that wasn't working because it's only 12. There's only 12 away. I'm going to go another week out. Yeah, there's your 12. See if they added anything here. Nope. Let's go to the 25th.
By the way, if you're serious about risk adjusted income, the safe wheel is the fastest way to get hands on with hedged premium selling. You'll get the full rule set, flowchart, and live examples free while the offer's still open. Just check the link in the description.
So this 2024, this issue doesn't happen. What, do I have something on here? Let's go here, clear that model. Okay, so 147 and 154. There you go. 57. No, that's not good. That's only 7 days. 126, 36. No. 12. This is 14 days, it looks like. 112 to 126. Yeah, that's 14 days. Let's look at this one. 25. This is closer. Minus 24. Let's see how symmetrical. 46, I'm looking for 92. It's 80. Might be this. No. This, maybe. 42, so 88. Yeah, right there. Okay. And now let's build the. That's pretty good. Let's split it. Okay, that looks good. Now let's see where we can go with this. Might be able to do it. Okay, got some good upside, decent upside, I should say. Good 20%, good there and here. Go for 500 bucks. Let's see if I can, what it looks like if I go down one more. Here, give me a profit target of around 600. And I'm coming across around 17. Got a pretty good, I'm good with going for 600 bucks here. All right, let's hit play. Either make 600 down 1500 or come out the back end or hit 30 days. $200, $450. $538. February. $400-ish. Just waiting for the trade to mature so we can get $600 out of it. 38, getting close. 628. Go here. Okay. Yeah. All right, so I'll take this off. I'll put on another one. It's March 12th, 2019. Go to 150. Let's see here. 157. 141. Here's 16-day difference. I'll take that. Look at the 25 delta. This is 80 away. This is $1.50 away. Typically it's 2 down. Looks fairly symmetrical. Let's see. 38, so that'd be 72. 95. Okay. That one's going to be off. Way off. Okay, so it could be this one. No. Okay, so even though it's not perfect, you know, it's not as symmetrical as some of the other ones, it's still as symmetrical as I can get it. So let's build this. Okay, that looks like the hump's going to go there. And if it goes there, I'll put it there so I can split it. And let's put the other one. Too much. Not enough. A little too much. I'll take not enough over too much. And that's way too much. That's not enough. But look at my upside. It's looking pretty good. Let's see here if I can get. Still got good upside. Got good. This one looks pretty good, right? Look at that, all the way to 21%. Got a good hump here. Got what is this? Maybe $900 profit target on this one. So it looks good. Let's go. Elephant. Looking for 900 bucks or down 1500, or coming out that into the sea of death. Nothing going on, waiting for the structure to mature. I'm going to check it right now. I'm going to stop this and see where I am. I got 105. I got plenty of time to get to the 30 DTE. Looking for 900 bucks. Starting to sag a little bit in the middle, but that's okay. Okay, coming down a little. Where are we? May of 2019. Still got plenty of time. Looking for $900. Okay, I'm going to stop it now. Going to look at my near DTE, see how close it is to 30 days. 68. June. $300. 50. $628. $938. Take it off. Let's see where we were. We were 40 days. So we had 10 more days left to take a look at this, hard look at it, but it hit profit before that. It was in trade for 101 days. So that was like 3 months just holding. All right. So it's June 21st. And let's see where we're going to go. I know what happened in August of 2019. So this trade probably is not going to survive that, but that's, I already know what, but I'm not, that doesn't matter. I'm still going to put it on the same way. Okay, so 61 to 82, no, 47. So 61 looks good, right? 47, 57 is 10 plus 4, that's 14 days. So let's go here, 25, 12. And minus 24. See how symmetrical? Not quite. You can just by eyeballing it. This one might be close. 49, so looking for 100. 91. Let's see what this one does. 48, so 96. 95. Yeah, this is as symmetrical as I'm going to get. Let's see where the humps are going to go. Right there, as close as I'm gonna get. Let's see if this one a little low, and this one's actually kind of close. And I'm gonna split it and then put on the other hump. Too much, not enough. But I'm gonna have to pick one or the other, so I'll take not enough. And let's see what this looks like coming out here. Not enough there. Still not enough. Okay, maybe this looks pretty good. Or are we coming across here at 20%? We got a pretty good hump, and you know, 1100. Shoot for 500 bucks on this. About half of that, a little less. Okay, so let's go with this. Okay, so it's going to be down $1,500 or plus 500. Probably down 1,500. Once we get into August, this thing gets a little, things got a little hairy there. Well, we're in July, so we'll see. We're still looking for 500 bucks. Down 300. Minus 500. See if we get down to minus 1,500. Probably when we get into August, we're getting close. Okay, here comes August of 2019. 700. 1,000. 1,000. I'm going to slow it down because I have a feeling I might. Well, maybe not. Let's see here. 1,000. Oh, I'll just keep going. 1,500 right there. Okay. So I'm going to take that off for a loss. And just put on another one. 139 and 156. 140. That's 17 days. 128. 138. That's 11 days. 156 and 170. Good. We found one there. 14. Here's a 25. That's 12. Usually this one's the most symmetrical. Let's take a look at it. 60 and 120. 119. That's as close as I'm going to get. And let's start putting the happen there. All right. I'm going to have to make this a 14. Too big. Not big enough, but I got to take the lower one. Okay, let's take a look at this. Not quite enough. So let's go up here. A lot. Okay, so I'm kind of in between not quite enough and a lot. I don't like this. Only $700. I want this to be at least $1,000. And I got a lot of juice to the downside. I might just have to go with this. Let's see here. I mean, I could go like this. And you know, now it looks better. I mean, there's a little tweak here. I mean, I don't want to make things complicated. That's under 1,000 anyways, so. Whoops, that was a 2. All right, so yeah, I could do this. Make this a 16. Give it a little more juice to the downside. And it's close to $1,000. I just think right now is a really good opportunity to be putting on a trade. I just know that it is because, you know, one just came off at a loss. So it's more of an opportunistic. But I'm going to go back to my 2 and 2. Let's think if I can move this 4 up. That's going to be a lot. But then I can move this 4 down. And that one's a little cleaner. Yeah, look at that. So I like that. Where we come across 20%. Looks good. And we're up here looking for about $600. I'll take that. Elephant. And looking for $600. Down 300, 450. End of August. $500. Looking for what? 600. September. Getting towards the end of September. Looking for $600 profit. That's that's a bad tick. October. Down 300. We're in October. Let me stop this and take a look at how much time we have left here. 95. We got plenty of time before we hit 30 days on our near. 168. The trade's starting to mature now. Hopefully it matures to the $600 level. $350. 400. $460. 458. Look at the structure. It's looking good, you know. 558. 578. 638. There it is. So it took about 3 months. You know, it takes a while for these trades to mature out. Okay. And we're in November 15th, 2019. Let's put on another one. At around 150 DTE. 137, 147. This is 14 days, right? No, it's longer than that. Let's see. This one, 154, 164, 13 days. Right? 13 days. Yeah, so this is where we're going to go. 25, there's total away. Minus 24, look for symmetrical. That's a little not symmetrical. That probably is pretty symmetrical. This one, 56, so 103, that's pretty close. Let's try this one. 52, so looking for 104 and 110. I would say this one was closer. So let's go build the humps. Okay, that looks good. I'm going to split it. I'll split the other hump. Looks good. Now let's do the final. That looks really good. Look at that. So even with this upper expiration line, basically almost no downside risk, okay? And then I got this nice big upside where I can go for $1,200. The most I'm going to go for is $1,200. I can still go with for $1,200 with this up here. And look at my downside. Nice. Okay, so I like this structure right here a lot. Okay, so looking for 1,200 bucks. Let's move forward. Still have that negative vega, obviously. Volatility can hurt the trade. It can. Looking for $1,200. Got positive data. Break even. Up 300. Getting to the end of 2019. Oh, we're going to come into a crash, aren't we? We're looking for 1,200 bucks. $738. That tick. $968. $11.28. Getting close. Structure looks great. $12.68. There it is. Okay. So January 21st. We're going to come into a crash. It's going to be interesting, right? All right. So hit profit there. Let's build it. Hopefully we can find something that's 14 days apart around the 150 DTE. So we got 150, 161. That's 11. 161, 171. That's 17 days. That's not going to work. 129, that's 21 days. 115 to 129, there's 14 days, right? 125 plus 4, yeah. All right, So we're going to go here. 20, this one's closest. Minus 24, not symmetrical enough. Just by eyeballing it, this one's close. 46 of 92. Oh, look at that. So this one is about 46. So 46 is 92. This is like 92 at the peak. That's right there. All right, let's get this hump going. Maybe a little bigger. That's pretty good. I can split it. And let's get the third hump. Too much. Pretty good. Yeah, right here. And now we'll come in with the final. All right. Trade's looking pretty good there. 15%. Let's see. Look at this. So I still have the potential to make $1,200 right here. My maximum profit right here. And I got some good downside protection all the way down to the 20%. I like this. This looks really good. Let's go. And looking for $1,200. Let's see what happens. Down 400. 300. The market's getting a little wanky. Where the structure is anyways. It's okay. See if we come out that back end. Maybe we will. Maybe we'll hit a crash. It's February 4th, 2020. We're getting close. Probably nothing's going to happen until we get to the crash. Looking for $1,200 in profit. Or if we come out into the sea of death and take it off, which might happen. I'm going to stop it here. By the way, what is the sea of death? It's right now the sea of death is right here. See how this is all down below the break even? This whole thing right here, I consider the sea of death. If this is above, then I consider the sea of death here, beyond here. But it's not above, so the sea of death is now here. This became part of the sea of death when it dropped below the break-even line. I'll just go day by day because we're getting close to a crash here. Down $600. Down $600. February 24th, getting close. Down 650. We might come into the sea of death right here. Yeah, okay, so those are all bad ticks, so let me just move forward 5 minutes. Okay, so this is pretty much where I would get out, take my $1,000 loss right here. So the market crashed, well, it hadn't totally crashed, but pretty much here I'm out. Let's see what happens. Obviously, you want to take a look at it, see what happens through the crash. So this is February 26th. February 28th is kind of like that first kind of crash day. 27th is pretty nasty. Here's the 28th, came down $1,000. So here's the crash, you know, where I consider the crash begins, and, you know, it's not really down that much. So let's go back to right where it pops out, right here, where it comes out, comes through, or I can go to the next day if I think it doesn't. I'm down 1,000 here, or I'm down 582 when it really comes out. Technically is at 830. So let's go exactly. The problem is that there's a bad tick right here. And so, but it's not out. Okay. So it's not through, but really if I took a loss it'd be here, but I'm not there. So I'm going to go to the next day and just try to be as technically correct as possible where it's got to be popped through. Really, I might lose $400 or $500, but this is kind of where it is at the time. Let me just be a little more realistic and just take this loss right here, okay? Even though technically that's, yeah, that's what I'm going to do. Okay, so we're here, we're going to rebuild. Well, we'll rebuild right here. What's the VIX trading? The VIX is, because I want it below 30. Okay, it's below 30. That's another rule. The VIX got to be below 30. Put on a trade. And it is. $25 and 42. Let's say 35. That's 17 days. This is 11 days. This is 12, right? 7. Yeah, let's see. This is 12 days. 142, 152. Oh no, sorry, that's 14 days. Looking good. Okay, so we'll go to here, 12. See how symmetrical this is. 70, looking for 140, and it is 118. Not enough. Let's try this one. 66, so what, 128, and it's about 120. It's 5. That's as close as I'm going to get. Let's go with the 4. A little more. I'm probably going to be overkill if I go up more, but let's see. Yeah, so we're going to go here. We're going to go 2 and the 2. And we'll see where the other 4 goes. Too much. Looks pretty good. I can't see it because of that thing in the way. That looks good. Let's go down to the bottom. See where the other 4 is going to go. It's way too much. Too much still. Okay. Not enough. Oof. Okay. I might have to move the other 4. So I don't have enough here. And I got way too much there. So I'm going to take that other 4 and move it. Move it down. Let's see what happens. No. Okay. If I move that down and move this one up. That's not bad at all. Okay. I like this. Got some pretty good upside potential here. 1100. So going for about $500. Got a lot of protection. I guess I could try to do it better, but it's not going to work. That's about as good as I'm going to get. Yeah, there's nothing more I can do with this. Okay, so I'm going to go here. E. We're coming to a crash, aren't we? Okay. Looking for $600 or $500. See what happens. Okay, down 542, up, down. Probably come into the sea of death. Yeah, I came into the sea of death here at $2,000. Let me, could be down 1,000, could be up 1,000. What am I really going to get out of this? Every 5 minutes, it's give me something different. I'm going to try to make it to where it's like a break even, because I think that's fair. That's probably what I would try to do. $62. Let's say I lost 60, but $2 on this thing. All right. Now the VIX is too high. It's over 30. It's 45. Let's save that. Alright, hold on a second. Let me go back here. Let's save that properly. Alright, what's going on here? Let's make sure I opened it. No. This last trade I put on? Yeah, okay, so I closed it out. Alright. So I'm looking at the VIX. It's not going to give me what I want. Let's go with the VIX here. And let's go out in the future and see when it breaks below 30. I can do that by looking at the chart. Did it go below 30 here? No. Here? No. Maybe this day? No, 31. This day here, May 8th, it was below 30. So let's go to May 8th. May 8th. And let's go to the right time of day. And go to the risk chart and SPX. This is my 15,000th backtest. All right, so we've got 115 and 133. That's 17, 18 days. 133 and 145. 143, that's 12 days. 145 and 161 would be 16 days. I'll take 16 days. 61 to 75. That's 14 days. Look at that. Yep, so I'm going here. So 25. 12. Minus 24. No, I'm just looking at it, eyeballing it. I can tell it's not symmetrical. 106, so what, 212? 193. Come on, maybe. Let's see what this one is. 96, so what is that? 195, so 190? And it's 214. So I'm going to say this one is the most symmetrical here. And we'll start putting on the fours. Needs more. A little bit more. Maybe a little more. That's good. I'm going to split it. Go with the 4 on the other side. That's too much. Too much. A little bit. I'll go lower. Okay, so let's go here. Too much. Not bad, but probably too much. This might be it. Okay, pretty decent. All the way coming across all the way to 34%. What am I? Oh yeah. See, I can go for my $1,200 profit target, no problem here, and I got some good downside. I like this structure. Let's go for this. Going for 1,200 bucks. Let's let them trade mature and see if we can hit the $1,200 or minus 1,500. $738, 900, 1,000, 1,100, 1,700. Okay, let's go back. So here wouldn't quite take the profit, and then I come in the next day at 8:30 and it's $1,700. So that's when I would take it off. So nice profit there. All right, let's go to the next one. Where are we? We are June 5th of 2020. Whoops. Okay, I was already there. 147, 133, 143. This is 14 days, right? Yeah. So I'm going to go there. 147, 57, 67 now. All right. So let's go here. It's 25 delta, closest to it. This one's 20 away. Or 19. Minus 24. No. No. Okay, let's see what that is. 95, so 190. 152, no. 90, so looking at 180. 157, no. I might have to go back. 89, 90 is 180. 159. Let's look at this one. 82, so 164. 168. There we go. That's really close. 4. All right. Yes, and let's go with 2 and 2. And let's put the other 4. Too much. Too much. Good. And let's go with the other 4. Too much. Still too much. Not bad. Okay, because I'm still able to go with my major profit target up here. So if it gives me more downside like this, and I still can get this up here like that and go for $1,200, I'm good. So I'm going to do it that way. E. And let's move forward, looking for $1,200 or minus 15. Let the trade mature. $900. Down 1,300. Maybe come out that back end there. Nope. What's going on here? It's June 2020. There's a loss. 1,500, unfortunately. Okay. Well, all right, so we take a loss here. That structure looked really good too. Sometimes, you know, the volatility probably spiked, and sometimes it comes out, you know. All right, let's put on another one. I end up in that same expiration cycle. Let's see, 121. That's 14 days. Let's see if this one's 14. That's not 14. 156. That's 10. 66 to 84. That's 20. 84 to 97. That could be 94. That's 13 days. And the other one is 14 days. I'm going to go with this one. Let's go with, I think I'm back in the same expiration cycle. Try to get a reversion to the mean here. All right, let's check this. 105, so 210, 185. Nope. $98, so I'm looking for around 200, 993. That's pretty close. This one might be closer though. 98, so not quite 200, just under 200. That's what it is. Okay, so there we go. Let's go with this. No. Nope. Yeah, that looks pretty good. We'll go with 2 and 2. Put the other 4. Maybe try to start here. No. Too much. Too much. And we go here. Let's go with the next 4. Ooh, that's a lot. Okay, this might not be too bad. Obviously, it's not giving me downsides. So let's go up a little more. Yeah, that looks pretty good. And the upside looks great. I'm looking good here for a $1,200 profit target. I think I just took a $1,500 loss, so let's see if I can get it back, right? Okay, down 400. In the middle of 2020. Looking for $1,200. That's the maximum profit target. Could possibly go for 1,500. I mean, you are at 3,000, but I'm going to keep the rules, and shoot for 1,200 bucks. 800. Almost 1,000. 1,000. 6. In July. Structure looks nice and clean. 700 bucks. $668. That's 1,000. Looking for 1,200. 1158. 1258. Okay. Let's put on another one. Let's see where we can find a 14-day difference. There's a 13-day difference, which is not bad. There's a 15-day difference, right? 173. That's a 15 days versus 13. I'm going to take the 15. Go to the minus 25. This 24 away. This is 31. 12. Minus 24. Nope. Not good. Fairly good. Let's see. 113, 226 is where we want this to be. It's 181, not even close. This is 108, so 216, 190, no. This is 101, so looking for about 202, 195, it's close. Might be able to get better. 99, looking for 100, or 200, yeah, that looks good there. Okay, let's put on the fourth. That's close. Let's try this one. Yeah, there you go. 2 and 2. Let's go with the other 4. Too much. I can get granular here. That looks good. Now let's go with the other 4. Too much. Way too much. Still way too much. Okay, now we're getting somewhere. Let's get a little more juice. I don't like that. That looks good. Nice profit, nice hump down here. Crossing over at 26%. We've got 2,000. I have a $1,000 profit target with this structure, which I like. So I'm going to go with this one. Elephant trade. We'll shoot for $1,000. And let's go. Let the trade mature out. We're in the middle of 2020. Down 1,100. Okay, that's a bad tick. Okay, look, let me go back here. I'm going to show you. Come on. You can do it. Okay. Let's go back. When did this happen? Okay, must have happened before that. Let's see. Struggling a little bit. All right, let me go back. Do this one. Trying to find that bad tick or where when it happened. Okay, now 1392. Okay, this is a bad tick here. That's why I'm not going to take it off for a loss. Look. And that's not realistic. That didn't happen. It was more probably down 1400. I just wouldn't. This little minute stamp, 1 minute span, I don't think I would have taken that off, realistically. Okay, so let's go. Now that I might not take it off later. Because it's definitely showing the potential to lose. August 2020. The trade's going to mature out, hopefully, and hit profit. We'll see. Well, maybe not. Oh, that's the bad tick at the bottom there. 1400. 15 right there. So that's a realistic loss. I'm going to take that.
If the elephant opened your eyes to what's possible with structure and hedging, take the next step with the safe wheel. Grab the free course now before it closes.